Hi, I'm Bruce Burke with Bullet Point Bulletins. We're being powered by Plato Data Intelligence, and I'm here with Ted Huff from FinTech Confidential, and Ted is going to tell us all about what the agenda is for today's show.
Well, Bruce, you and I have talked about this, and this is definitely going to be the don't believe the hype episode. We've got so much stuff going on. Everything from the New York Fed collaborating with the Monetary Authority of Singapore, as well as simulating transaction pilots for cross-border CBDCs. Not only that, but we're going to talk about 7 of the Bitcoin wallets that have been dormant since 2011, transferring over $60.6 million in Bitcoin. And then we'll jump over and talk about the Justice Department. Wow, I can't talk today. The Justice Department finding their second largest seizure of cryptocurrency, confiscating over 51,000 Bitcoin. And then we'll also talk about how Bitcoin is hitting its price low, multi-year price low. And analysts expect a little bit more stuff to be going on there, and we'll dive into that. And last but not least, how could we not give our opinion? So you got to stay to the end to talk about this whirlwind with FTX, Binance, and everybody else out there in the marketplace. This thing has just been craziness. But Bruce, maybe we should just hop straight in to what the New York Fed did with Singapore and exploring the CBDCs.
Okay, I think that's a great place to start. It seems like the Fed is very interested, and there's not only a project coming out of the New York Innovation Center, the New York Fed, but there's also a project in Boston with the Boston Fed, and they're working in conjunction with MIT, of course. And they say they're complementary programs, where one is actually software, where the Boston program is actually some software and some apps and whatnot, and where the New York is more of the underlying infrastructure sort of a thing. I find all this very interesting, that they're doing a lot of testing, and they're doing a lot of testing in a very rapid pilot that you don't normally see.
I think it's interesting that we have these Federal Reserve banks doing these testings, and there have been a number of companies that have been doing this for years, using the smart contracts and using your traditional coins to move stuff around, as well as some altcoins. And I just think it's interesting that they've decided that they're going to try it out, even though it's been somewhat proven. Actually, not somewhat. It has been proven multiple times. I think they're just doing this really to understand and to learn the technology versus figure out whether or not it works or not. But there's also some pushback that's happening too between the Fed diving into this. So we have the clearinghouse standing up to the bank rights, where they oppose the CBDC, and they're really telling the Treasury, "Hey, let's step back here," because I think what they're feeling is that the Treasury Department and the Federal Reserve are going to, for a lack of better words, disintermediate folks like the clearinghouse, which is going to be a little uncomfortable. Now, I personally see CBDC as having a role, but mostly in the wholesale side of the house, which is what the New York Fed did in their pilot test phase, is really looking at moving it at a wholesale level. And really, I think that's going to be the place that we're going to have the most success with CBDCs, because it doesn't require a good user interface. It can be really, really bad when you're transferring from one financial institution to another. But that's also why the clearinghouse is really starting to push back on this.
Yeah, from everything I've read, they've clearly stated in both the U.S. Internal trial, and then in conjunction with Singapore and their UBIN Plus collaboration, it seems like they are saying we're not going to create a CBDC. Nothing that's going to be public facing anyway. It would be, again, an internal to the banks, right? Central bank digital currency. There's no need for us to see it. It's not for our eyes. It's not for our hands. We're not to use it. So, in my mind, it's a what they're looking at is a marker. It's kind of like what the J.P. Morgan Chase is doing with, it's a marker at the end of the day to say, okay, we're settled in this column here, and but this one, it's still, we're not putting a token there, and the token is essentially a placeholder. Is what it seems like. What they did say, I found the most interesting was, they were able to expedite the payment, like you, I cannot talk today, expedite the payments and bring transaction time down from 2 days to 15 seconds. So there's a big win for blockchain. And they were able to, do this, apparently testing it multiple times. So
they wanted to make sure that it was actually right, because they're like, there's no way it could be this fast.
We had no clue. We haven't read the news for the last 10, 15 years. We were unaware that this actually moved money this fast, and this cheaply, as a matter of fact.
Well, you mentioned the JP Morgan piece. I mean, that happened about 2 weeks ago now, where JP Morgan had actually done a cross-border transaction through multiple different entities, through multiple different jurisdictions, and they did really well with that. And I made a post about that on LinkedIn, and just kind of walking through it. I don't see retail CBDCs becoming popular in developed nations. Now, retail CBDCs may pop up in not less developed, I shouldn't say non-developed, but less developed regions that maybe don't have the banking infrastructure to the level that Singapore or the US or Japan or Australia or the EU have. We have a really mature banking infrastructure. But when you get into other regions of the world, it doesn't have that kind of capabilities. So I think you're going to see retail CBDCs really show up in those regions of the world where it's a little bit more fragmented within the banking ecosystem. And that is starting to play out. And the Africa and the UAE and the Emirates countries got together and created a consortium to really start to drive the stable coin and the CBDCs across that region just last week. And it was really interesting to see, because they see this as being the next step for their financial ecosystem in that region, which is very promising for the technology.
Yeah, that's kind of their approach. That's kind of like their CBDC, instead of just doing it the way our feds are doing it, which is using a 10, 15-year-old blockchain technology is what they're really using. The very simplistic stuff, from what I understand. Not there's not a whole lot of layers on top of it. They're strictly using just straight blockchain and doing the transaction. I found it interesting that at the same time they're doing all these transactions and discovering all this stuff, they're also discovering, that people have been hiding, bitcoins for decades now.
Yeah, well, I mean, that brings us into like one of our other topics, was the fact that the Justice Department just made the second largest fine or confiscation, seizure of more than 51,000 bitcoins from the Mt. Gox days. And I'm just blown away, Bruce, by how this guy got caught. I mean, you explain it a lot better than I do, but like, it just blows my mind.
They said it was on a single board computer, so I'm guessing a cold wallet, right? Probably not connected to the internet. I'm guessing a cold wallet, probably a Raspberry Pi or something like that.
Mm-hmm.
Sorry, my Siri's going off in the background. No.
Gotta love technology when it decides to have a mind of its own.
This thing's right here, so I'm thinking like a Raspberry Pi, but they found it in a bathroom closet in a popcorn tin. And he had how many? 51,000 plus. It was
51,000
at the time of seizure. It was over $3 billion worth of Bitcoin on a single board computer in a popcorn tin in a bathroom closet. Oh my God!
Yeah, Well, and you think about it. The way that I word it is with blockchain. It's not about if you get caught. It is about when you get caught, because it's all public. The entire string of every time it moves is on a public ledger that anybody and everybody can see. So as soon as you make that move to try and turn it back into fiat, or you try and transfer it to a known wallet, you're done. You're done. And I believe that's kind of how this guy got caught too, right, Bruce?
I believe he moved some of it to a wallet that was connected to a bank account somewhere many years ago. And they said in the article that it was good old-fashioned police work and then some, chain analysis or, something also, right? But mostly just sitting patiently and waiting for the guy to screw up. But apparently they're also going after him for the fact that he didn't report it on his income tax that year as income, that stolen income. He stole it from Silk Road is where he got this stuff. He went in and opened a bunch of accounts and put 20 in some accounts and 200 in other accounts and did a bunch of deposits and withdrawals and deposits and withdrawals, and confused the system because Silk Road was essentially just a web page back then. I mean, I'm sure it confused the hell out of the thing, and managed to essentially empty their trust of every bit of Bitcoin that they had. And this has been a mystery for 10 years that this guy got caught with, So, even though the feds didn't want to see Silk Road open and being the Amazon of drugstores, on the internet, it's still a crime to rip them off, So, this guy is going to pay dearly, I think. I think the last name was Zong. I want to say it, Johan or Jonathan
James.
Zong.
James Zong. Yeah, James Zong.
Yeah.
So what's really funny is as you talk about them going after him for taxes, if you look at the most recent tax form, it literally says to be sure to claim income from illegal activities, which I find freaking hilarious. Like who's going to go, yeah. I did some illegal activities. But that in and of itself.
They got Al Capone the same way back in the day. They got him for failure to declare. So Sam Bankman-Fried, if you're listening,
be sure to claim all of that.
All of that.
Oh man.
Anyway,
well, one of the things that's interesting is that the Justice Department made that seizure, and that started the tumble of the Bitcoin price, which it is, even as we're talking today, has even gone further down than we had earlier this week. And I think the analysts are starting to feel like it's going to keep going down. And we'll get into this a little bit more, but I think the whole FTX thing is just snowballing the fall in Bitcoin price.
Yeah, the article I read this morning, there was a JP Morgan analyst. I think I posted it. There was a JP Morgan analyst who made a report. I think it was late Saturday, and said that investors are now deleveraging their crypto. They're moving back into the stock exchange, and that's a clear sign. On Friday, the stock exchange had a 30-point rally, and probably their best in a couple of years. So that shows that people are lost some faith in cryptocurrency and tokens and alternative and all the rest, and went back to the good old USA stock market and started buying stocks again. So that's a monumental shift,
So do you think that has anything to do with those 7 Bitcoin wallets that have been dormant since like 2011, transferring about $60 million in 60.6, almost $61 million in Bitcoin? Do you think maybe that has like a tie together, or is that just coincidental?
I don't think it's tied together, but I do think it's related to the sell-off of, I think they're like, okay, well, I got in right here, right? So no more hodling, you know what I mean? I got in for 4 and it's going to 12 right now, or 13 or wherever it's at right now, and let's make a quick 3 on it, because it doesn't seem to be going back up. It's been going, it's pretty much been like a lathe the last year, and it just keeps slowly just turning off and turning off and turning off. And I would think that anybody who invested like they did to fund those wallets is going to pull that money out of the wallets the same way they went into it. But I'll let you dig into that a little bit more.
Yeah, they're thinking that it's, and mind you, everybody's guessing. So these are like everybody looking at histories and looking at how things are going and all the news. So I mean, all of this is speculative, and none of this constitutes as financial advice by any stretch. Definitely not from me. Definitely, most likely not from Bruce. I can guarantee it's not from Bruce. But they're thinking it's going to continue to drop down to 12,000 or maybe even a little bit less in price. And I think it's going to take a little while, especially after. And I find this interesting also. After all the events that have happened this week around FTX, but I think it's going to take a little bit of time for people to readjust and see what's going on. Plus, if you look at the rest of the investments and the rest of the market, I mean, it's really volatile right now. And so with everything being volatile at the same time, there's a little bit more conservative perspective around these things, where typically you're like, okay, well, I can have one risky investment if everything else is stable. And when everything's unstable, then you pull back from the most risk. In this perspective, this is perceived as the most risk because it's the most unknown. It may not be the most risk, but it has the perception of being the most risk because of the unknowns. And so you're going to see that you're going to see it continue to go down until everything else starts to stabilize. So when the interest rates start to stabilize, when the market starts to rally and continue to rally, when you start to see housing rebound and re-level itself, when everything else starts to level out, that's when I believe that you're going to see that price of the Bitcoin and ETH and all the other traditional coins start to go up. But I did find it interesting that Coinbase opened up their books, and over 20% of their entire holdings are in a meme coin. They're in Shiba Inu, and they came back, and I know, dude, I'm laughing too. But they came back and they talked about how that is not a reflection of but they said it's not a reflection of their investment strategy. It is just a reflection of the retail investor and where they want to participate, which I can totally understand, because if you look at a lot of the retail investors, it is more about, and most retail investors don't look at it as an investment. I'm just going to say that when you're talking these altcoins, it's more of you're supporting the people, you're supporting the idea, you're supporting the culture. It is really around the culture versus the actual value of the coin. So, people group together in their little tribes, and you've got your Shiba Inu and your Dogecoin tribes that have similar thoughts and feelings and really start to seeing that pace. And so you see these groups of people that just have like-minded individuals, and that's one more way for them to be part of that group. It's most likely not an investment. I've got a number of guys that I work with that have Doge and Shiba Inu, and they don't look at it as an investment. They just think it's fun. It's entertainment.
They're
it's
not.
Just like
they don't have an Excel spreadsheet. They're not tracking it. They're not
doing
it.
dollar cost averaging. They're not doing that. They're like, yeah, dude, I bought like 4 more. I think it's funny. Ha ha ha. And they look at it like going to the casino, dropping a 20 into the slot machine, and hitting max bet until it's all gone. That's just how they're looking at it.
Yeah,
so
it's activity. It's entertainment.
Yes.
It's memes and stonks. I mean, the Wall Street bets guys. I mean, they're just killing it. You were talking about we're not financial advice. You're not financial advice. I'm not financial advice. I found it funny. I was doing some tweets this morning about FTX and Sam and that sort of thing, and I happened to end up on Sam's profile, and on his Twitter profile,
oh my gosh,
it says, and I took a screenshot. Not financial advice on his Twitter profile. Not financial advice, and I was like, oh my God, he was telling them all along.
and if anybody has a previous one that shows that he doesn't have that on there, go ahead and throw it down in the comments. Send us a link, whatever, man. Just let us know, because I think it is funny that he did say that. He also said that you can't do FTX in the FTT in the US. But wait a second, weren't all the venture capitalists and all of the celebrities and all of those folks here in the U.S.? So I guess we're about ready to go into the FTX discussion, is what it feels like right now.
Well, I watched, my favorite CoffeeZilla this morning, and he was doing a video, and then he came into the video and he says, "Hey, this is the future guy," and he says apparently Sam got on a plane and left the Bahamas and is now headed for like Argentina or something, and nobody knows where Sam is. So there's a real discussion about FTX right there to start off with. He's going into hiding or something.
That is crazy, man. That is crazy. And I think one of the best places that really, really worked out and did a good job, and I don't typically mention these guys, but Forbes did a fantastic overview, and I'll put the link in the show notes. But they did a fantastic overview of SBF's collapse of the empire, right? And I'm going to read this just step by step so everybody can kind of get a good understanding of like how this thing transpired. Like, on November 2nd, CoinDesk published an article talking about Alameda's $14 billion balance sheet in the FTT token that, by the way, FTX invented. It was just an invented token. And then November 6th, CZ said that he said, "Hey, I learned some stuff," aka the CoinDesk article, that he is going to liquidate his FTT holdings. Now, mind you, CZ with Binance was the largest investor in FTX. And he's the one that got SBF going in all of this before they became competitors. And then the funny part is that on the 7th, then SBF, so Sam Bankman-Fried, shoots back at Zhao and basically says, "Hey, these are false rumors. We're not insolvent. We're not going to do this." And then he deletes the text, deletes the tweet. And then all of a sudden, there's a run on FTX. So on November 8th, FTT plummets to more than 30% of levels that they've never seen since February. And later in the day, CZ tweets, FTX asked for our help in this liquidity crunch. And I'm like, oh my God, that is such a baller move to just come out and go, "Hey, by the way, these guys over here, they ain't doing so good, but they came to me to help them out." So that's November 8th, man. And I'm going to let you kind of just fill in your thoughts, and we'll kick into the rest of the story here a little bit deeper. But like, what are you thinking about, like, up to that point
Well, one point in there, at one point, Sam asked CZ to say, hey, rather than going public and taking your FTT public, we'll offer you like 22 a share, right? Or something like that. And, don't take it public, we'll do it with you. And when they're saying liquidity crunch is I have assets, I just don't have cash, right? That's a liquidity crunch. I have assets, I just don't have cash. Mm-hmm. And so CZ is going to loan me the cash, the change I need to get over the toll bridge, right? That's what the idea was. And then CZ started looking at the books and seeing what their assets really were. What was this? Did they have bars of gold that were, that they needed to, get rid of, to pay CZ back? Well, what they had as their collateral was FTT tokens. Yeah. So they were supported by themselves on tokens that didn't have any value because of the bank run on the tokens. And essentially the whole company only had value because people believed in the value of the FTT.
Yeah. Yeah.
And when there was no more value to it, there was no more value to the company.
Yeah. So, that's the funny part is that as that happens, that's when Bitcoin hit the 2-year low. And it's come to light now that on the books at FTX, they had over $1 billion in Bitcoin, but no one can find any record of them ever having any Bitcoin on the books. At least that's what we're seeing so far. Now, mind you, this is continuing to evolve, and every day we learn something new. But that's at the point that the Bitcoin hit the 2-year low. Binance decides to back out. So CZ goes, hey, man, this, like you mentioned, this is not on the up and up. I'm not liking this. I'm not going to put my stuff on the line. And then that's when SBF breaks the silence, and then he says, hey, I'm kind of screwed. I'm kind of screwed. And what's interesting is that, I've heard through relationships, this is like second and third hand knowledge, right? So take it for what it's worth. And I guess there was a call with some of the investors, and SBF basically just said, hey, guys, I know that this looks really, really bad, but can someone spot me like $4 million? So it's kind of funny that he's gone down that path and he's done those types of things.
If you're on a call with investors and you need, $4 million, why not?
Sequoia dropped $120 million into it, right? So he's like, what's another 4, man? Come on. You got $1 billion
write me
fund.
a check, dude.
Well, come on, man. I'm good.
Send
for
the
it.
courier over with the check, will you? But
just fire it over,
I
man.
saw this morning, now this is Twitter information, but this is what I saw this morning, 900 million in assets, 90 billion in liabilities.
Yeah.
FTX, right? Approximately. This is a ballpark figures, and these are Twitter figures, so they may be not
they may be inflated,
advice.
Just slightly inflated. But what we were just talking about really is what happened on November 9th and then November 10th. Tether slips, and then also one of the other things that happened is Solana got hit too because FTX had a whole bunch of Solana in there, and Solana just got done having their conference. They just announced all the great stuff they're doing with Google. They've announced all this stuff that they're doing, and then they get nailed because of how much FTX had in them as well, or how much FTX had of Solana's coins. So that starts to happen, and then the 11th of November, it all comes crashing down, and FTX and FTX US and Alameda Research all file for bankruptcy. And so there's a whole bunch of stuff that goes on in there. But the regulators, the Capitol Hill, like everybody is really trying to figure out how and what's going on in this. And from my perspective, is like, this reminds me of the early days in the .com boom, where people were throwing money into anything that had a .com at the end of it. ABC.com, XYZ.com,
Pets.com, toys.com, all those.
Right.
I remember
so
those.
They were writing checks that are equal to what they were talking about here with FTX, and they all just evaporated. And so I think the big difference here is that those were investors writing checks to companies with the hopes and wishes and dreams and desires that they would turn into something big. The main difference I see with this is it went beyond the investors. It went into the retail market. And had the .coms gotten into the retail market, then we would have had just as much outcry from all the regulators. And what's going to end up happening, whether we like it or not, the regulators and the politicians and everybody are just going to drop the hammer down hard on any company that is doing this type of business. And they're going to start to require cash reserves, provable cash reserves, which is funny.
Just like for banks, just like they do to the banks, right? After the housing crunch, they started stress testing the banks, and a lot of banks did not make it through those stress tests. They didn't have the financial reserves.
Yeah. Well, it's even funnier, and this is kind of, and I shouldn't say funnier, but what is slightly humorous about this is what started this whole thing was SBF going to Capitol Hill and lobbying for exactly that, is proof of reserves.
Oh, yeah.
And proof of a number of different things.
There was a video clip in CoffeeZilla's video about him going to Congress and saying, well, with what we're doing versus what the banks were doing, and he's talking about like Lehman Brothers and all this stuff. Mm-hmm. He's like, we have full transparency. Whereas these guys are putting, money inside of projects, inside of folders, inside of projects, inside, and it completely obfuscates, the ability to see it. He says, we're totally clear and totally, and now, somebody posted again, Twitter information. Somebody posted the portfolio of FTX, and oh my God, and the different categories and the different companies, and it's all just, they're not worth anything more than the time you paid the graphic designer to design the little round icon for the thing. I mean, that's the value of these companies that they had in their portfolio. Nothing. It was nothing, and it's really strange to me. We were talking last week about the Dogecoin being worth as much as HP, you know what I mean? Yeah. The market cap anyway, right? I don't think it made it, but when you go back and you look at all this stuff, and I put a thing up earlier this week about having been a contrarian through most of this. I didn't, even though I'm a fintech guy and I'm a firm believer in digital first and digital forward, and we were doing fintech before it was fintech, Ted. But when I saw this stuff, I was like, I go back to Warren Buffett. It's not producing anything. It's not, it doesn't make anything. So how, it's just pure speculation, Well,
and that makes me think, I don't
like to harp on that, but it's, it is,
I like the Warren Buffett quote, and I'm probably going to get it wrong. So call me out in the comments, folks. But, he says, when the tide goes out, that's when you learn who was swimming naked. And the tide has gone out on FTX, and we found out who all was swimming naked. I'm really hoping that the signs of, like, the contagion that comes off of this is short-lived. I think it's going to be a little bit harder for everybody to move forward. But you're seeing like Bitcoin drop by 20%, ETH drop by 24%, Tether drop by, 30 basis points. Binance itself, Binance dropped by 18%.
Yeah.
I mean, these are a lot of drops.
BlockFi's ready to go because they had a bunch of money that apparently Sam was bailing them out, and the money that he gave them doesn't have any value, right?
So speaking of BlockFi, and I know this isn't in our stuff, but I mean, state of California halted everything for Binance. I mean, not BlockFi. Everything's been halted by the state of California for BlockFi, but that is for them to figure out what's going on. I have a feeling they will get turned back on, and there'll be a bunch of other things that come around on that one. But, you know, the big piece that I take out of this is not the FUD, right? I hate doing the FUD stuff, you know, fear, uncertainty, and doubt. You know, that isn't the piece. I think the biggest piece that we need to take out of this is the fact that this is a great way to educate the public on what can go wrong when you don't do your own research, when you don't dive in, when you don't look at it, and when you don't expect people to follow a standard across the board. I mean, if you look at FTX, they didn't have a board of directors. They didn't have a CFO. They didn't have like any oversight. They didn't have. They had
they had 11 engineers, and apparently from again the CoffeeZilla video this morning, there was some kind of backdoor that Alameda Research had a backdoor into FTX's banking and money and essentially could essentially reach in and claw money back into Alameda without having to worry anybody over at FTX about the fact that it was going on. I mean, that just came out today, you know, or yesterday. Who knows when this?
Well, and then you've got the, and I'm going to use air quotes here, the hacking. of FTX and all of basically FTX now has absolutely nothing because everything was extracted out of all of the wallets, out of all the places. They were put all over the world in unknown wallets. And I think this is more, I will call it an attack, and an insider attack most likely is what everybody's starting to think it is. But as I mentioned before, with blockchain, it's not a matter of if, it's a matter of when, and this will get brought to light. It may be 15 years, but
maybe another decade for we you know, maybe as I'm just about to pass away, I'll read that article about they found Sam's money, you know. But I found it interesting that I think it was yesterday, it may have been Saturday, that the Saturday was yesterday, that the White House actually issued a statement about the need for more regulation in crypto. Not the regulators, not the Justice Department. The White House itself said that there needs to be more regulation, and we need to dig into this because it's really starting to hurt people now. I mean, it's essentially. I'm not going to say our whole economy moved to crypto, but a vast majority of people that were the stock traders and the bond traders and the day traders and all that moved into crypto, and a lot of people left banks and some large financial institutions to move into crypto, and those people are going to be looking for jobs again, just like everybody else. And there's not going to be a whole lot of staff from FTX looking for anything.
I get that, but at the same time, I'm looking at it from the perspective of when you look at the crypto, it's not going to be like a Meta that just laid off laid off, whatever you want to call it, 11,000 people. You've got Twitter that laid off 50% of their force. I mean, all of these really big layoffs, you're not going to see that in crypto. You're going to see little bits and pieces, and you're going to see certain things happen, but it's not going to do that. I still see crypto growing. Are the investments coming in at a slower pace? Yes. They're definitely coming in at a slower pace, but those who have established a strong boundary and have great practices in place that have, like, there are a couple projects that I'm involved in that are focused on being an extension of banking, being an extension of the banks. And those types of projects are going to accelerate at this point because they're following all the regulation for the banks. They're following all the guidelines. They have their legal pieces. They've got all these different pieces in place because just like the White House made a mention of there needs to be more regulation and more structure around this, every single entity that does any sort of regulation, any sort of oversight, any sort of anything in crypto that is not speculative has said we need to get our handle on this. And I think the biggest piece, if you look back at Mount Gox, that was the last big hit that we had in crypto. And that was a failure of the system because it was so immature at the time. We didn't have a failure of a system or of a technology or any of that stuff. We had a failure of a person, a dishonest person, which is harder to manage. And I think that will come out. And my personal opinion is that when you start looking at blockchain, it actually has the potential to make banking safer, faster, and not only that, but create additional regulation around how you have proof of identity, how you have proof of funds, how you have proof of a number of different things, especially when you start to bring in the smart contracts. And I think that's where we're going to start to see a lot of the regulation come around is really in what are the requirements for smart contracts? What are the requirements for tying the smart contracts? What are the regulations for tracking and tracing? Chainalysis has done a really good job around this in the public chains, but I think you're going to see even more that go into that. And I don't think it's going to be about the technology itself. I think it's going to be how do we maintain visibility and transparency throughout the individual process. And not only that, but understanding where, when, why, how, and who.
Yeah, it seems like the Feds, moreover, kind of coming back up to the top of the hour, right? That the Feds are more interested in, again, tokens not for a speculative investment type of a thing, but more of a utility oriented. And I think that's where tokens are going to be the most used and the most accepted. It really makes sense from that point of view for them, especially with the speed and agility and all the metadata that's surrounding each individual transaction. That's kind of, if you think about settlement at the end of the day, let's say on cross-border transactions between here and Argentina where Sam's headed, or,
well, I mean, he does like a volatile price point. So, I mean, Argentina's currency is up and down a lot. So
maybe he can help them out. Maybe he can teach them how to make a token or something that they can make and, generate some income.
but what you were saying around the speculative side.
But the idea of using a token internally as a marker system and an internal ledger makes total sense. But I'm not so sure that moving forward that the Feds are going to allow the ICOs that came out 2 years ago. I'm not so sure that's going to be able to continue to exist. And I think there's going to be a lot more regulation on the market, and you'll see more people moving to the utility aspect of both tokens and NFTs. Because when you think about a smart contract and when you think about settlement at the end of the day, that can all be written into the smart contract, and essentially the software takes over, right? And it's just a routine. It's a software routine at the end of the day, rather than somebody having to sit and plow through everything. And I think that is the value where blockchain will connect previously disconnected systems.
Yeah, and I mean, you just hit on a big piece, right? It's programmatic execution of established and defined rules. And so, and they're triggered by certain activities and certain things. And that is a big piece where I feel there's going to be a lot in there. Now, mind you, there's always going to be, just like we have trading cards, we traded baseball cards, Pokemon cards. Everybody's always going to have an innate value assigned to something. And so, I mean, I don't see the non-utility tokens like crypto, like blockchain and Ether and Tether, and Binance Coin, like all of those. I don't see those going away. I think they just start to evolve into something a little bit different. But man, we've covered so much today.
Yes,
we could probably talk about this forever. But I'm curious to see what transpires over this next week and what other things hit the news wire over the next week or so. And I'm excited to kind of just dive in again next week.
Yeah, I was trying to think like what's the overarching theme that's not financial advice? What's the overarching theme, or what's the lesson we can take away from all this today, right? One thing that I noticed that was very heavy in the news this morning was a lot of people, and I'm going to bring it back to the name of the episode, don't believe the hype. There was so many magazine covers, so many news stories, so many, pieces and video interviews and everything else, exalting these people that, are now criminals on the lam, essentially, right? And, when you think about Kramer breaking down a couple of weeks ago about, I pushed Meta and I was wrong about Meta, right? He's been wrong about FTX, right? And a lot of very intelligent people went with FTX. I mean, Kevin O'Leary, he's a smart guy in an investment. He's, not just a dude on TV that's investing $500K in a startup. I mean, this guy's seriously invested in some areas. Yeah. And like you said, Sequoia and, JP Morgan Chase, and the list goes on and on and on.
Yeah.
Totally believe that this guy could manufacture money out of thin air.
Yeah, and I think it always comes back to is do your own research, dive in, don't just take somebody's advice. Make sure that you feel comfortable with the risk that you're taking, and just again, I posted this. I'm in a bunch of chats around this too, and I'm like, hey, so there is always a chance something could go wrong. There's always risk in everything we do. There's a risk that on my way to get into the car, I could trip, fall, hit my head, and die. I could get in the car, drive out the driveway, and get hit by somebody else and die. Like, I could do a million different things that could all have bad consequences. But I assess the risk of everything that I do and everything that I say every time it happens. And we should be doing that with everything in our life, not just what we do, how we do, where we go, what we say, but how we use our money as well.
Yes. And if you're doing your own research, do your own research to the point of finding something that's actually contrary to, don't live in a bubble, right? Find somebody that's condoning it and condemning it, and really dig into both sides and really see what it's all about. Don't just watch one YouTube video and say, I did my research, right? Don't just read one article, in the New York Post and say, I did my research. Get it from multiple sources, get both pros and cons, and don't let a writer who's getting paid per word to put an article in a magazine to put food on his table, take food off of your table. Don't believe the hype, and don't believe the media. Believe what you know is truth.
So just I'm gonna summarize just from my perspective is like, if all you hear is good stuff, find the bad stuff. If all you find is bad stuff, be sure to find some good stuff. It has to be balanced. And so that's where I'm going to leave it for today. Just make sure that your information is balanced, and we're coming at it from a bunch of different directions, and hopefully next week we have some more positive news to bring in. Just there's lots of really cool stuff that's going on. So Bruce, thanks, man, for pulling all of this together with the bullet point bulletins. Got to thank Plato Data for helping and supporting us in this. And as always, I'm happy to be here with FinTech Confidential. If you want to find out more about FinTech Confidential, you can find us on all the socials under FinTech Confidential. You can also go to fintechconfidential.com. You can do at FinTech Confidential on YouTube and find all of our episodes there as well. And Bruce, thanks again, man. I'll let you close out for Bullet Point Bulletins.
Yeah, sure. With Bullet Point Bulletins, we're being powered by Plato Data .ai. That's how you can find them. Nice website there. It's a Web3 gateway, a growing concern that's really trying to do some unique things. There's a lot of information there. If you're an enterprise and you're investigating the competition, if you're an investor, if you like DApps, you can log right into your DApps right from the interface here. Really cool stuff. PlatoData.ai is the place, and we're being powered by that. Thanks again to Ted for coming on and helping me organize all this and discuss all this. It's hard to have a discussion all by yourself. It's wonderful to have somebody that's as knowledgeable and as well versed and actually works in the field and is not just a guy that's pulling opinions out of the air to put in front of you. He's actually done this stuff and worked on this stuff. So, that's important stuff. Me, on the other hand, I just make it up as I go along. But I read the news, But thanks so much, Ted. I really appreciate it. And thanks, everybody, for tuning in.
Thanks, Bruce. Have a great week, and look forward to doing this again next week.
Thanks, Ted. Have a